So now let us look at how the bearish engulfing pattern confirms the prior resistance. So here I have taken the 1 hour intraday chart of silver. Remember I mentioned the universality of candlesticks, Japanese candlesticks. The universality means it can be used on, Japanese candlesticks can be used on any time frame, on any asset class and on any instrument. Time frame means monthly, weekly, daily, hourly, 1 minute chart, 5 minute chart. We can use Japanese candlesticks on any time frame. The asset classes means we can use the candlesticks on stocks, commodities, currencies, etc. In this case, it's a metal, it's a commodity. Okay. And the third thing is any instrument. So if you are trading the cash market, the spot market, or the futures market or the options market, whatever you are trading, Japanese candlesticks analysis can be used in that. So that's the universality of candlestick patterns. So we have a nice uptrend here and I have drawn a resistance line. Remember, as professional traders, we must be able to draw resistance lines. So then the market goes down, again it goes up. So you have a nice bearish engulfing pattern here, not quite engulfing, but the opening is very strong here. Rather than opening here, it has opened itself down, so it's even better. But I would have preferred a nice engulfing candle. But nevertheless, this is a variation of the bearish engulfing pattern, which is confirming prior resistance. So these two candles have not been able to either break, cross or close above that resistance point. So that resistance is valid. The highest high of the two candles become resistance. So we have drawn another line. So this is R2. So this is R1. So now you have this resistance zone. Okay, so if I were to take a short position here, my stop loss would be above that zone, just 1 or 2 ticks above the zone. Ideally, I wouldn't take this trade because the support level is very near to the entry price. So it's a very small reward for a large risk. So I wouldn't take this trade. So I would need to have a reward to risk ratio of at least 2:1 or 2.5:1. My preference is 2.5:1, which the reason for that I will explain later. But we are looking at bearish engulfing pattern confirming prior resistance. We are looking at what happens after the bearish engulfing pattern confirms prior resistance. This is what happens. In spite of the fact that you have support here, the price has crashed through that support and is heading down. So it was very comfortable if you would have just kept stop loss here, taken a short position and let the market ride. So the Japanese candlesticks allow us to be flexible. We could have chosen to take a minor position here rather than taking a major position. The difference between a major position and a minor position is, major position is where you take you go short quite a number of shares or quite a number of contracts. Minor position means you take very little bit of risk, you don't risk a lot of money on this. So we could have taken a minor position without keeping a profit target and just observed what happens at that price. So a bearish engulfing pattern confirming prior resistance is a very strong bearish sign. Okay.